What I'm going to do today is walk us through corn use and what I look at for production from South America and here in the U.S. next year, and do the same for soybeans, and try to give a forecast of what I think the price will be. So what you're seeing in front of you right now is the last few years of WASD balance sheets, supply and use tables, and what I'm highlighting at the bottom there is just how the ending stocks have changed. We've sort of turned a corner on ending stocks. They're starting to draw down a little bit as our use has outpaced our production, and that's a good sign. And we should think that would support corn prices, and as I would like to think, corn prices are lower than they should be right now. I think corn's caught up in oil and soybean issues in quite a big way. I'd like to see corn prices a little bit higher. Just for truth in advertising, if you came to this last year, the corn price ended up being $3.36. I said it would be $3.30 last year, so I missed that one. So I'm going to talk about some of the major use categories and see how we're working through them. Feed and residual use, the USDA's currently got it pegged at 5.5 billion bushels. What you're seeing on this graph is the last 18 years of use. And that red line is something the USDA produces called the grain consuming animal unit. It's a way to say how many animals are out in the herd in general that consume grain. It's not perfect, but they do a nice job of it. And you can tell we've sort of recovered from the down draw we saw near the end of the 2000s, but our feed and residual use hasn't recovered with it. Now there's a couple reasons for this. They're still getting corn, but it's in the form of distillers grains, not necessarily corn. That's a substitution effect, and I think we've seen a little bit of efficiency gain in particularly the pork herd. So I think this 5.5 billion bushels is probably a little bit high. We're not seeing, the USDA's had a tough time projecting this number. I've had a tough time projecting this number over the last few years. A good indicator early next year, when we get to December 1st stocks reports, we should see this number be around 2.33 to 2.34 billion bushels for the first quarter to hit the number they're currently on, in my opinion. So keep that in mind when we see those numbers come out. Corn use for ethanol. This has been a real growth. We all know ethanol has been a boom and a growth area for corn use over the last decade. But what we're seeing is it sort of level off. USDA lowered this 50 million bushels in December. You'll have different numbers in your program because I did this over a month ago and they've since changed their mind. Luckily, I haven't changed my mind on my numbers, so we'll be good to go. They've got it at 5.6 billion bushels, and we have seen in the first quarter of this market year corn use for ethanol lagging last year's pace. That is true. And it could lag it somewhat significantly when we finally get to the November report on ethanol use for corn. But on the good side, on the hopeful side, you guys might have noticed gasoline prices dropped recently. Has anybody noticed that? I'm the only one. Okay, well, I noticed it and it was excellent, right? With that kind of gas drop, I think we should see more gas consumption in the U.S. economy. You would think that would be the case. The price of ethanol is depressingly low for ethanol producers. Every gallon of gasoline we use, you would expect to see 10% ethanol in it at the current price ratio. So if we increase gasoline consumption, there's a hope there that we'll increase ethanol use via the blend. The other sort of positive or hopeful place is in ethanol exports. So last year, and we've seen this, we've been building ethanol exports trade year over year. We're starting to build more and more markets. A lot of it has been dependent on Brazil. But last year we did 1.635 billion gallons of ethanol exports. I think this year, based on the price of ethanol and its competitiveness in the world market, we may be able to hit that number again or maybe slightly eclipse it. It really does depend on how much production the ethanol can keep up. You'd think they would probably have to scale back at some point. So what I would look out for is ethanol production numbers week to week. We'll get ethanol trade numbers every few months. If you read my farmdoc daily, I will be talking about it because it's a big deal this year for us. So I'm sort of optimistic we could exceed the current USDA projection by about 20 million bushels. But we need exports. We need it into Brazil. And while we have built all these smaller markets you see, I could have kept going on forever out there. We just have a bunch of countries that are starting to take small amounts of ethanol. That's a good thing. But overall, I'm a little bit more optimistic than USDA. Having said that, if we don't see the increase in gasoline consumption from one reason or another, we're probably not even going to hit the USDA's number. So keep that in mind. Corn exports have been excellent thus far in 2018. They really took off around March. Second half of this 2017-18 marketing year saw just an explosion of corn exports after we lagged through the first half. And we've sort of carried that in to the first half of this marketing year, the first quarter. Really strong exports. We're about 70% ahead of pace of last year. Now that sounds promising. The USDA currently has it at 2.45 billion bushels. I'm a bit lower than them, and here I'll talk about it why. You notice some of our major trading partners, Mexico, Japan, South Korea, Colombia, do you notice something about their little bar charts? They're pretty consistent. You're not going to see some 100 million bushel jump in a year. They're pretty consistent. If we have the corn, they buy around the same amount. Give or take 50 million bushels. Right? They bought a lot in 2018. A lot. Now they could continue that into 2019, and we do export corn to a lot of places. But right now you're starting to see in weekly export inspections the pace of exports slowing a bit. What I'm going to be looking for is when we get into February and March, does that pace stay at a lower level or does it pick up? That's going to be a key point, I think, this marketing year for exports. But right now I'm about 2.395 billion bushels overall in use, lower than USDA. It's still a lot. It's still a great number, and we're still using corn at a really high rate. And we're using corn above our production level. So we're looking at stocks to use from USDA at about 11.8%. With that kind of down draw, you would expect that red line, which is the dollar per bushel for seasonal average price, to be much higher, I think. Some of the other market dynamics uncertainty, particularly in the soybean market, I think have held corn at least a quarter below where it should be, maybe upwards of 35 cents. So that's where we're at right now. When we think about this year's production, we did about 14.6 billion bushels. They're projecting Brazil at about 3.7, Argentina recovering a little bit from the drought, and then former Soviet Union increasing their production next year. If you folks notice something about, what do you guys notice about this graph? Of the major corn exporters, we dominate in corn production. We are the king of corn, and we have been for a long time. And so when we talk about the world export market and the price of the corn right now, that's 14.6 billion bushels with a strong use. I think we're in a good shape to sort of see some price tick up next year. It really comes down to how much corn we end up planting and producing in 2019. Right now, the USDA's got their 2018 yield at 178.9. I'm actually fading them a little bit. We've had some serious harvest problems in some places. We might even lose a few acres, but I definitely think we'll lose a little bit of bushel count nationally. We'll find out in January. That early January USDA bevy reports is going to be important this year, I think, to corn prices. So we're sitting at a little bit, I think a little bit lower yield. I'm still using this long run linear trend yield, even though you can see we've been above it for quite a few years now. We've had good weather. We've had good crops. I think next year we took a trend yield corn about 174.2. I think that might be close. The really big question, the one that's probably hanging over the corn market a little bit right now, is how many acres are we going to plant? Who thinks we're going to plant more than 89.1 next year? Could I get a vote? Oh, excellent. You guys are a good crowd. Nobody else ever thought we were going to plant more. We're going to probably plant more corn acreage. The question is how much. I've got a model. It's usually wrong. But I like to use it anyway. That says, I've got corn acres a little bit below 92 million acres. I think that's a good estimate. Now, having said that, if you start seeing these companies doing their surveys right in the middle of our crop insurance month, which I wish they would stop doing because that annoys me, but they don't listen to me. And you start seeing numbers like 94, 93 and a half. And we get to that March prospective plannings report, and it truly is like 93 and a half, 94. Look out. Because I think in the 91, 92 range, we're looking at flat ending stocks. You guys with me? But anything above that could be punishing. Now, why do I think we're going to add a little corn acreage? Mainly substituting out of soybeans. I do not think we're probably going to hit the 51 million acres of wheat USDA is talking about. Winter wheat out in Kansas and parts of Oklahoma, they didn't get it in. I think we'll see more spring wheat. I think we'll see a little bit more cotton. I think we'll see a little bit more grains in general. But corn's going to take some from beans. And all those other ones are probably going to take some from beans as well. So, let's talk about the forecast. The one you see here is USDA's December forecast. And there's mine next to it. You see red numbers, that's where I differ. In the end, we come in about the same place. I'm a little bit lower in use, but I've faded the yield. They've got price at 360. I've got it at 370. Here in Illinois, we would think that would be a seasonal average price of 8 to 10 cents more, depending on where you market. And I've got the kind of gumption that I did next year as well, just for the heck of it, because I don't mind being wrong. And 2019, 2020, as you see, I got acreage at about 91.8 with a yield of 174.2. Basically, flat stocks to use, even with me fading use a little bit because I'm concerned about global growth in general, particularly in some of our major trading partners. So we're looking at 370. Now you guys are saying, well, seasonal average price, what does that mean to me? When I started this week, I was saying, well, we could see if you're seeing $4 out there in November 2019, you might think about, selling some. Through the marketing year, we're going to get a strengthening basis, I think. And we can see corn prices. There's a good carry out there right now for those of you marketing. If you've done HTAs in May or July, I think you'll have the opportunity to set a better basis. Everybody with me? But when you're thinking about, I haven't sold anything yet, I still think there's strength there. But some of those points in time I was talking about are going to be inflection points for corn prices this year. The January reports, the March prospective plannings report, those are going to be big time. So try to pay attention to those. So that was the good news. This is not good. And I think we all know this. We've seen soybean ending stocks go up to the USDA's projection of 955 million bushels. And it's mainly due to that 1.9 billion bushels of trade. Oh, just to be fair, so I'm not giving you the shade. It was 933 last year. I said it would be 920 this time last year, so I missed that one as well. But when we look at use thus far this year, we got good crush. Crush is still going at a strong pace. We're about 6% up from last year's pace through the first 2 to 3 months of the year. USDA's got it at 2.08 billion bushels. That's great. We're excited about it. It's not going to solve our problem. We're not crushing our way out of this. We're not going to get down below 9 million bushels of carry out via crush. I wish we could. Here's where the problem is. 1.9 billion bushels of trade. You guys can see that gray line, or hopefully in your books you can. That's China. They normally take about 60% of what we sell. They normally take about 60% of what everybody sells. And they're not taking their 60% this year, and that's why we're at 1.9 billion. And we all know why, and I'll talk about it a little bit more later. Now, what we have seen is a little bit of strength from traditionally Brazilian buyers, so that's helped us out a little bit. But on the whole, we're in a little bit of trouble here. That 1.9 billion, by my calculation, includes what China's already bought in the last couple of weeks, and probably needs to be 6 million metric tons more. So we're not in a good place right now with trade. China, for some reason, has turned the corner on soybean imports, and we all know what the reason. It felt like at some point this fall, everything was aligning just so they wouldn't have to buy our beans. They got the African swine fever. I think they've been underselling how devastating that's been to their hog herd. We don't know. I don't know. I wish I did. I think they've lost a lot more hogs than appropriate. China's at about 3.3 billion in imports this year. They didn't need our beans. I thought earlier this year they'd take at least some of our beans this year. They didn't have to. They could have, I think, bridged the gap. They had the swine fever. They got their crop in early. It's looking excellent. It looks like Brazil's going to start harvesting probably in January. I think China could have bridged it. They bought some. I think they'll buy more. But this is the first time in a long time they're saying that they don't need more beans. That's not good news. I like this graph a little bit. For those of you who can see it over there, I'll come over there in a minute to bug you. This is daily prices all through 2018 in what I consider to be sort of a spot price at a major port in southern Brazil and New Orleans. So they're sort of the same. But it really highlights what happened this year. We're coming along, tariffs on steel and aluminum, no big deal. We start to see a spread. And this is a normal pattern between our prices and Brazil's prices. It's not too far off. The Brazil trucker strike hit. If we could somehow give them a backhand bribe to do another trucker strike, we should do it because it would help a lot. Brazil trucker strike hit, and then bang, June 15th. The tariffs were laid on, and you guys see what happened. That's a huge bifurcation. Now, there's been times when there thought there would be some kind of resolution. We get these runs up and runs down, and then here we are. What happened here? Brazil started to think there might be a resolution. They started selling beans, and we've seen this convergence. This isn't fixing the problem. This is them coming to us. We are going to be in a dogfight for the soybean export market in 2019. To give you an idea of how this all shaped up this year in general between us and Brazil, the blue lines are us, the red lines are Brazil, and the solid lines are 2017-18 marketing year. The small dots are a 5-year average, and these are thus far in this marketing year. Notice we are well below. Look what Brazil did last marketing year, normal to their average, as China came in and just bought everything they had. Now, we got this little bump that we don't normally get last year as we got some of Brazil's customers. We've been selling to places like Iran, Pakistan, places we don't normally sell to. They aren't huge buyers, but we got this little bump. We're well behind pace this marketing year. Brazil's doing something that they don't normally do. And it's all them selling to China. So we're in a bit of a tough strait here. The competition is going to be tough, and it really does depend on how big a crop Brazil is going to have. Our stocks to use ratio is massive. So big that I can't stress how tough this year could be if things don't fall our way. These are huge ending stocks. When we think about the production level, we're at 4.6 billion bushels. I think we'll lose some yield this year. The key is, notice the difference between us and other major exporters between corn and soybeans. Brazil's at 4.5 billion bushels by USDA right now. I think it'll be higher. That's around a little over 89 million acres. Last 2 years, Brazil's done above 50 bushels an acre average yield. That's not where 4.5 billion bushels is. If they do that again, we're talking closer to 4.65 billion bushels. The world has got beans. We've got a lot of beans out there, and the competition is going to be fierce. On top of it, Argentina is recovering from their drought last year to about their normal level. They may fade that a little bit, but it's really not going to matter. So when we think about 2019, the question is, how will our bean crop do, and how much will we plant? Do I think beans have a quadratic trend? No, I do not. But there's been something fundamental change, in my opinion, at the end of the sample. So to get a nice projection of what the national yield might be, I use a quadratic. At some point, I'll break it and we'll have two linears, but right now this is the best fit. I've got yield at about 49.2 nationally next year. I bet a lot of you out there are thinking that's probably low, and it probably is. The big question is the soybean acreage. We did 89.145 million acres. Now, when I was talking about corn acreage, about how I thought corn acreage would work out. I was using the same model. I think soybean acreage will be a little below 86 million acres. But there's a lot of uncertainty in that. There's a lot of uncertainty in that for the same reasons I talked about in corn, so I won't bore you with the details. Right now, USDA is projecting a 955 and an 860 price on a 23.3% stocks to use. I've faded the yield a little bit. We had some real harvest problems this year in a lot of places. We've drove all over the state of Illinois this week. There's been beans standing in a lot of fields, more fields than I would have expected. So I think that's more common than most people think. So I'm shading them a little bit on crush, but I'm optimistic, if you can call this being optimistic about exports. And I've got the price at $8.50 nationally, seasonal weighted average price. Sadly, you're catching us at the end of the week, because at the start of the week, I was saying this. You see that November 2019 soybean price? A lot of places in Illinois cash, you can get above $9 a bushel. I can't say that today because that's not true. But it's very close to that. You know, when you're thinking, I know it's early to think about selling new crop beans. I know it is. You know, if you get a chance to do 9, I think it's a good idea. The kind of storage we're doing in beans this year, basis is going to improve above the minus 80s and minus 90s we've seen coming out of harvest. But you're looking at about a minus 50, I think, all year long. We've got a lot of beans. We're not moving them. So this $8.50 price may be at the high end. I've got acreage at 85.7 with a 49.2 yield. The one thing I want to point out to you folks before I close this up are these two numbers. 4108, which is what our use has been this marketing year, and 4177, which is what their production would be if we planted 85.7, harvested this much, and this yield's right. If you don't think any of these, if you think these numbers are low, this is going to get much bigger.
because this is not eating into that. Everybody see what I'm saying? There's only one way for ending stocks to go if we don't start using more, which it doesn't look like we're going to. If we plant these kind of acres and get higher yields, they're going up. That's price pressure. Well, I hate to do that to you and end this on such a horrible note, but I'd like to wish you a Merry Christmas. And it could be worse, maybe. Thank you, guys. Thank you very much.